Foreign investors yanked 12.44 trillion Korean wons out of Korean stocks in July, but they were buying something else at the same time. That's the paradox tonight, and it sets the tone as Seoul opens in about an hour. Foreigners net sold 12.1 trillion Korean wons on the KOSPI and another 338.1 billion Korean wons on the KOSDAQ. Samsung Electronics and SK Hynix led the outflows, the two biggest names took the biggest hits. Now here's the twist, foreigners bought a net 593.7 billion Korean wons of Korean ETFs in the same month. Codex Leverage and Codex 200 alone pulled in 375.6 billion Korean wons combined. So it's not a wholesale exit, it's passive fund rebalancing, FX drag from a weak one, and pre-earnings positioning. Now to the structural story that could rewrite this flow. Korea just announced its biggest FX overhaul since 1997. The plan dropped July 19, the most ambitious forex reform since the Asian financial crisis. From January 2027, foreign investors can open won-denominated accounts at overseas banks, no Korean bank account needed. Advance reporting thresholds more than doubled, and low-risk transactions can now be reported after the fact. 24-hour forex trading already launched earlier this July, and the reference rate mechanism is being modernized. For KOSPI, this is the pipe that could bring passive capital back, but it's a 2027 story, not a Monday story. The Monday story is earnings, and Wednesday belongs to SK Hynix. Sell-side consensus expects an operating profit range of 60 to 65 trillion Korean wons for Q2 2026. That would be a jump of 551 to 606% year-on-year, the number that will define the tape. The SK Hynix ADR will move on that print at the US Open, watch it closely. Same Wednesday, LG Display drops its Q2 numbers, and this one is the opposite trade. Consensus expects an operating loss of 83 to 119 billion Korean wons, the trough, driven by one-off workforce restructuring charges. Full-year consensus still sees 1.12 trillion Korean won's operating profit, up 117%, on the Apple OLED ramp in H2. Thursday and Friday then hand the microphone to the banks. Shinhan Financial reports Friday, consensus net profit 1.61 trillion Korean wons, roughly plus 4% year-on-year. H1 cumulative profit is projected at 3.23 trillion Korean wons, the group's highest ever half-year result. The BOK's July 16 quarter-point hike to 2.75% is a Q3 tailwind, it won't show in Q2 numbers. Woori also reports Friday, expected to rebound to about 958 billion Korean wons in net profit after Q1's Indonesia provisions. And watch commentary on the roughly 1 trillion Korean won's Lotte non-life insurance deal. Shinhan is the front-runner. Now the quick hits, starting with defense. Korea Aerospace just finished delivering the last 6 T-50i advanced trainers to Indonesia on July 16 and 17. Indonesia now operates 22 T-50i jets plus 20 KT-1s, 42 Korean-built aircraft, the platform's largest overseas customer. Advanced talks are underway for Indonesia to become the first export buyer of the KF-21 Boramae fighter. Consumer angle, Starbucks Korea workers formed the country's first-ever union at a coffee franchise on July 18. SCK Company is expected to swing to a 22.9 billion Korean won's operating loss in Q2, after the Tank Day boycott. Emart owns 67.5% of Starbucks Korea, the union and the loss compound the retailer's risk into Monday. Also this week, the Seoul Bankruptcy Court is expected to rule on HomePlus's rehabilitation appeal, filed July 20. Two more filings worth flagging: Dongwon Industries and HLB. Dongwon Industries posted Q1 revenue of 2.53 trillion Korean wons with net profit up 51%, driven by packaging and logistics, not tuna. HLB narrowed its Q1 net loss by 40% to 40.9 billion Korean wons, but the real catalyst is the FDA's imminent Restructuring ruling. Watch item to close: Wednesday's SK Hynix print sets the tape for Korean tech into month-end. That's your setup for the week. For the full analysis, head to LineVestnews.com, subscribe to LineVest Daily, and I'll see you tomorrow.